Good morning, good afternoon, good night. Welcome back. My name is Joe Josh. I go by iChart Daily. Today is January 13th, 2026. In today's video, I'm going to be going over Bitcoin, the short-term bottom, yada, yada, yada. This is not financial advice. This is a window to my thought process. I've been doing technical analysis for 18 years, in crypto for about 10 years. And I'm trying to teach you this beautiful language of technical analysis. If you're looking for up-to-date updates from me, follow me on X. The handle is the iChart Daily. Let me get it for you there. The iChart Daily. And let's get into it. So, for the last 50 some odd days, I've been saying we're forming a bottom, we're forming a bottom, we're forming a bottom, we're forming a bottom. Not my opinion. Let's get rid of everything, and I'm going to do it raw today, cuzzy. So, what do I see? I see support, right? I see wicks. I see candles closing. You can't say that this is forming a bottom until stuff starts playing out, cuzzies, right? You need to see where candles stop in order to say, okay, this could be the form of a bottom. And then you double click on the screen and you open up your indicators to see if what price action is doing, and then what your indicators are doing to understand what momentum is doing, right? Let's go over it. During bottoms, your price action stays flat. Flat meaning we haven't broken 84,000, and we haven't broken yet 94,000. While the indicators are in a bullish structure. The bullish structure that we're looking for is a golden cross. We're looking for the RSI to not be below the yellow moving average, but be above, and also be above the 50 line. That's when we really pump, break resistance, and head to higher highs. And we want the stochastic RSI to be in a golden cross structure. Over the 50 is step one. Over the 80 is when we really see fireworks. Not my opinion. Just look at the chart left and try and duplicate it. It's just that simple, bro. So we were watching the 12-hour confirmations play out. We were watching the daily, the 2-day, the 3-day, the 4-day. Over the last couple of days, I've been saying I'm watching the 5-day and the weekly because I want to see when the next confirmations are playing out to help me understand when the when is going to play out. The when is I'm trying to figure out candle closes, candle opens, and how many candles it's going to take for this shit to play out. It's just that simple. So, also, as we get those confirmations on longer time frames, they hold more value. Meaning, when the MACD golden crosses and the RSI breaks above and breaks to 50 and the stochastic breaks above, we were bullish for weeks. We went from 86 to 111, pumped 30% before consolidation, another pump to the upside. I'm just trying to catch the 15-20%, cuzzy. That's all I'm looking to do. Now, let's take a little sidestep. For 1,029 days, the swings made higher lows, higher highs, higher lows, higher highs, and the steps are going up. This is the first time that we're having a consolidation and it's not confluencing with the long-term trend. What do I mean? We're literally going to a monthly, and that blue line lined up with the golden cross confirmation, the RSI above, breaking the moving average, stochastic above the 50. And once again, though, when it happens on a monthly time frame, you're calling the entire bull and bear market. So we're getting short-term confirmations on the 3, 4, 5-day, but if we look at the monthly and the 2-month, it's still like, it's not aligning. You understand? When it's not aligning, the first thing you need to think of is breaking the all-time high of 123 has a lower probability than it did when the MACD, the RSI, and the stochastic were still showing the bullish confirmations. Now, does that mean we cannot break 123, 125? No. What that means, though, is if we do go up, make a lower high, the same high, or a little bit of a higher high, while the indicators remain in a bearish structure, that matrix equals a bear trap. That means it's hidden bearish divergence. And remember, what I told you is when price action goes flat, meaning we stay between 80,000 and 115, 120, unfortunately, this will take longer on a monthly time frame, but it's all the same stuff. That means we're forming a top, unfortunately, right? So, first thing that comes to mind though is yes, we are below the moving average, but we're above the 50, right? So bleeding stops at the 11 and 21 day moving average. And we have room to go back up, like I said in the last video. I'll just do it like this, right? If you remember the symmetrical triangle that I made, we broke down. Now, in order for this to be a matrix, it's just a big matrix in my brain, right? We broke down. If we go up and use what was support as present resistance, it's a confirmation, very high probability that that is a continuation to the downside, meaning we do this. If we do this, we do this. And then maybe another lower high. And then once we enter below the 50 on the monthly, that's the best buying opportunity possible for Bitcoin because it's down 60 to 80%. Not my opinion. Look left, okay? So now let's delete everything, go back to the 5-day, and once we understand the full analysis of the market, where we are long-term, short-term, now we look at the play, right? The play, meaning where could this take us to? Where is the risk reward? Where's the liquidity, right? This is chess, not checkers. I am preparing 2, 3, 4 moves before this shit even fucking played out, okay? 1, 2, 3, that's a possibility. So now we understand that if we come up and stop here at this major liquidity zone where we've seen previous resistance levels of 102 to 107,000, I need to, or you need to understand that this could be a head and shoulders. The reason why I say head and shoulders is because of what I just said about the analysis of the monthly. If we go up, see a confirmation to the downside, that is bearish. What is a bearish market structure pattern? A head and shoulders. That means this support could potentially be broken, as well as this mouse if it doesn't work the next time I try and use it. We go up, we could potentially come down. Once again, this is speculation, not the play. But you need to speculate in order to figure out what's going on. You need to turn on your spider senses before you get robbed so that you don't get robbed, right? Welcome to New York. So that's speculation number 1. Speculation number 2, this goes to here, right? Still bearish, okay? We could come all the way up to here, right? Boom, 108,000, number 1. We could break that and then meet these levels here, right? Or even a little bit higher to the 115. So once again, those are levels on the way up. What I will be doing is looking at the 12-hour daily and 2-day, the shorter time frames, to see when the market structure changes the other way. Right now, we're just about the golden cross. Right now, we just broke the moving average. Right now, we just broke the 50. Do I think we have room to grow? Yes. Are we overbought? Yes. No, we have room to grow. Meaning, I want to see if the daily has consolidations, but stays above the 50. Stochastic RSI has consolidations, but stays above the 50. MACD remains in the golden cross structure. Just that simple, okay? But it does look more bullish than bearish because once again, even if you get bearish sentiment on the 12-hour, the 10-hour, the 4-hour, your longer time frame will predict what the shorter time frame does. Meaning this looks good. Over the next 5 days to potentially 7 days, a week or 2, let's just say, we could potentially once again be pushing up to these levels. Now, what sticks out like a sore thumb is this level right here of 99,000 and then this level here of 106. And the reason why, remember, what one way is going to be the reversal the other way, okay? So this was resistance, this was support. pretty high probability that this will be resistance and this will be support potentially. Okay. First step is this one though. So I always use the bottom of previous support levels as present. I use previous support levels as present resistance and then vice versa. Okay. Now, what I could see potentially happening is we do this, we potentially come down, same thought process. What was resistance could be support. So we go to this reversal, right? Then we come down and go to this reversal, and then that would form a higher low, like the 90,000 again, right? So we go to the 100, we come down, stop at the 89, and then that forms a nice W pattern. That pushes us to the 107 to the 115. And all that would play out, once again, this plays out, right? What was this? 189 days later, 200 days later, lining up with May, June, July, tax season, the whole nine. And if we were to stop there, then the bearish sentiment continues. So that's the video. Love you, appreciate it. We're at 93.5. I would leave you with some alerts. As you can see, we've had resistance all the way from November 13th, the December 3rd, 7th, 11th, January 5th. I'm setting an alert at 94.697 or a little bit above, notifying me that once again we're going to 97.8. Another visual, excuse me, sorry, these are live, bro. Right? That this is not a script. I don't have a team. I'm not editing. I'm just chatting with you like we're at a bar somewhere and we're just going over stuff, right? Moving averages. You have golden crosses when your shorter time moving averages break above the longer time moving averages. And it was happening here on the daily. Right here, this is the 11, 21, 30, and 50. The yellow is the 100. And we had right here a golden cross from the purples, the whites, all the way to the yellows and the greens. The 100-day moving average also lines up with this range of 97 to 99,000. We could see potential resistance there. But this is a short-term visual reversal when the moving averages do that. Another thing that I wanted to show you was this that I've said in previous videos. Previously, when we fell to the 50-day moving average, we had a hard time breaking the 30. Right now, the 30 lines up with 100,000. And if we were to do the same thing again, of having this right here, right? We don't golden cross, we don't break the 50 or the moving average, and we don't break the 20, then this is just a bear trap to the downside. Another visual, no, that was it, sorry. That was the visual, also the weekly, right? So we fell to the 100-day moving average here. And again, we had a hard time breaking the moving averages. If we get that same visual again, my spidey sensors are going to go up, understanding that this, again, lines up with 100 to 105,000. And if we start seeing resistance here, we need to understand that that is not financial advice, my major profit-taking zones around here. I don't like the longer time frame. The sentiment of the world right now is turmoil, chaos, war, riots, and killing. And also Powell just said something about getting papers from the DOJ. So, we'll see what happens. But as of right now, the play that I opened up here, I am using the moving averages 97, 98, 99, 100, and potentially 105 as my take profit levels on the way up. Love you guys.